Welcome to TradeTheMBI.com. This is John. This report is for the 5th of December. Well, and like we were talking about here, we had the 76% line right here at the 3,086 for the S&P ES futures here. And right off that DOC spread, but then we saw the steel return, and right in time for, as we always talk about, right around the 4th and that of new fund money coming in, and they saw that as a nice discount to buy in for year end, particularly for those that may have missed the run up. It's a need to buy situation to get caught up. And we're right back to the exact same 31.1650 here from a daily. In fact, we're at the 16 right now. Again, this becomes another resistance pivot, so this will be interesting at this particular spot. We have strong short-term buyer action coming off of that initial dive right there. And this is something we talked about before on this, that it can take a little while, and we can even come back to the highs before experiencing a deeper decline. You can see I have that minus 22 where the steel dipped to before. And as I pointed out, it just takes a bit of time usually when this goes through. The fact that we have such a strong short, usually that comes back and then it's reinstigated right before the next move lower, if there's going to be one. Obviously, in this particular case, we get the strong steel, but you've got to see also a reaction from mid-term buyers and long-term buyers, which not exactly happening at this particular point. So we're in a stasis, which well within the expectations of what we had, and likewise exact same configuration here, the support at 76. So it was well-defined marker. You can see the dotted lines. That's suggesting, though, that that dip below the red line will have to be revisited. It's just a question of waiting for either a steel fade while we're still having the red line in that. The question will be, it's like we always point out, when you get these strong moves back of orange, in this particular case, crossing down below the cyan, at the same time you have steel crossing red. Bodes a little bit better for support at this, but again, we're hitting up against those resistance. In this case, you can see we're right up against the EBM green here on the NASDAQ right there, which is at that 83.21 level. Just so you can have those numbers. From a euro standpoint, a little bit of bolstering back into the euro. It's been seeing that rising red coming through and green crossing above cyan, which was enough right at that peak moment. It had made the peak and then it came back on it after some of the NATO talk, but looks like everything was warmed over in the Brexit vote, in the sense that the election's coming up, and whether or not the status quo will be maintained looks promising, which is also going to support the S&P at this particular stage. The rise in oil boding well for economic growth, in the sense that you're not going to see that if things are falling off the cliff like you constantly hear about, and also that improvement for gold, probably going to be short-lived. This is getting to a key meeting point right here of green and cyan. The strong rising red just means that there's been excellent long-term support, especially back over that 13.5 above that previous pivot. So could hold on for a little bit longer. We'll have to see maybe a shakeout move into the positive, but it's still going to have trouble holding up to that. So from an intraday standpoint, the 5K came back, filled a little bit from the previous day, and that created a nice turnaround because we were already right at the 13.5. It broke above at the same time you had the crosses, and it was just a straight up move from there. And once it got above that 3100, which was key algo point, you can see we stayed along it for quite some time, building up, and then it just started to break there, and you had the cyan move below red, and pretty much stayed that way until we got to the peaks. And even when we ended up with the DOC spread of the cyan over, it was happening with improving steel, even though it was slightly below the negative 13. That led to just a tiny bit of softness before it was able to maintain itself. And we had a couple of little breakdowns once we finally got a little bit of clarity We ended up with some reasonable DOC spreads that took place. They just didn't produce a whole lot of dip, because then you had the secondary 3109, and then on the upside that 3117, which is corresponding close to the daily at 3116. So right within that confluence area, within a point of each other from a daily to all the way down to the 5K. That shows you the power of that level at this particular point. And the range has been between that 17 and 09, and then on any more significant breakdown, we'll be back down to that 31. And once you're below the 31, though, then it becomes a bit more problematic, because there's a lot more room, and people aren't going to be active until you dip further. So that's generally the play of it. If we get above the 31.17, then we've got 31.30s, 40s up there. Shouldn't be anything in the way of that, particularly since we have the new fund money. The problem is if you don't break those with the money coming in, it's going to be pretty tough to sustain that as the month starts to roll along. So we'll just keep taking it day by day as it comes at us. No complaints at this particular point. This just got a little bit soft at the end of the day and kind of became a little boring after the initial move, but that happens. There's nothing you can do about it. And you just have to be willing to stick within the range and say, hey, I've got a broader signal and I can just play it to the next algo level back and forth, depending on how it moves. It's been a strong DOC red on this pre-market situation right there. A couple of positive extremes, but nothing too significant because those have already been filled, and we don't have any dip below the red line that needs to be resurfaced at this particular point. So I imagine we'll just be caught between this range unless there's enough bullishness to push through it, which is probably going to take quite a bit to really shove it through. If they can't do it in pre-market, it's going to be much harder during the regular session. As always, though, I will put up anything unique and interesting on the Skype chat. Trade well.